Hey, what's up, everybody? Jason Brown here. Just thought I'd go live and talk coronavirus, market sell off, all that good stuff. So it's been a while since we've been live. I thought, why not come on and chat about it? Typically, we're, inside of our trading group having these discussions. So let's take it to YouTube tonight. So let me make sure I got the comments up just in case some comments come in. And then let's make sure we're gonna go live on Facebook as well. So give me a second here. Let's just check Facebook, make sure we're live, and then we will look at some charts, talk about the coronavirus, right? I feel like I should have like a Corona beer right here with me when speaking about the coronavirus. But yeah, that thing caused a wicked sell off over the last 2 days. But we sort of saw it coming. We sort of saw it coming, but we didn't know why the market would sell off. But we saw the market pulling back. So I'm gonna pull up some charts. We'll just chat, we'll talk, and let's talk about what to do and where to go from here. And Deuce on YouTube, Paula Marine in the building. Welcome. So my buddy Mark John on Facebook tuning in. So we're live on Facebook, we're live on YouTube. So there it is. Let's pull up. Well, let's just talk. Let's just go straight to the charts. Whatever. Let's go straight to the charts, okay? So we got the virus, okay? One thing is important to know or think about when you're looking at the overall market and this virus is you're trying to figure out, number one, what is going on. You're trying to figure out how much further can the pain be and where could it go. So let's just take a look at the chart of the S&P 500. We'll start with that because it's the biggest representation of the most stocks that represents the U.S. economy. So let's go there first and take a look at it. You can see the overall market has been in this uptrend, right? So it's been boom, 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 consistent uptrend. And then we kind of just took off here. When you look at what's happening with the coronavirus piece right here, we got this big sell-off, right? Gap down right there. That was Monday. Boom, sell-off continues on increased volume. And so you start to say, where can it stop? Where does the pain end? And the reality is the pain probably won't end until it gets to about down here. So it's a good chance we may have another day or two of selling. But that's where I would be looking at for long-term support on the overall market. You can see right there, right there, right there is where we typically find support. It'd be nice if we found support up here near previous resistance, right? So if it just kind of hooked out right here, I would welcome that versus a pullback all the way down to roughly the 3,000 level. But the point is, I think you have to potentially expect that the market can get down here to about the 3,000 level. Now, when you think about that from a bullish standpoint, if you zoom out, the market is still in an uptrend, even if it pulls back down to here. You can see we've boom, boom, right? Boom. So this would still be an uptrend, so nothing to worry about. So it's very interesting, to me, when you kind of look at the talking heads on TV and you kind of think about everything that's going on with the virus, it's so important to be able to read charts because when you can let emotion get the best of you when you think about the coronavirus. So what is this virus? I don't know all the technical terms of it or anything like that, but what I do know is that the biggest disruptor of it is that it may mess up the supply chain, right? So if we can't get computer chips or iPhones or whatever components that you use in today's products, if we can't get them from China, there's this mentality that obviously it's going to affect sales and it's going to affect earnings because they don't have the product physically here to sell, maybe the food or drugs that we get some type of component from China from it. So if they stop shipping stuff from China because they don't want to also ship in the virus that I believe can be passed off through physical touch, then I think the sell-off warrants that, oh, if we can't get the products in, then the stores can't sell stuff. The stores can't sell stuff, and people are scared to, well, they won't be scared to buy stuff, at least not here in the U.S., but there's this thought that this is going to send us into some type of recession. But I want to just talk about let's break that down for a second. Let's just take Apple, for example. All right, let's pull up their chart. Okay. And I'll bring the chart in a second, but let's talk about Apple. If you are an Apple customer, if you love the iPhone, you love Mac products like myself, and they can't get the product into the country that's being, made or shipped in China, ask yourself one simple question. Are you all of a sudden going to go and buy an Android because supplies are low or you can't get an iPhone into the country? Chances are, if you're an Apple customer, you love Apple products. You got, if you're like me, you got the watch, I got the iPad, behind me. I'm on a Mac. I'm all Apple product out. So if I can't get my Apple product in the next 30, 60, 90 days, all I'm going to do is wait. And so that begs the question, will Apple still not make the revenue that they were going to make for me as a customer ever? Or will they just have to delay when they get to collect that money, as well as I have to delay when I'm going to get my Apple product? Does that make sense? So even if there's a shortage of phones for 30 days, there's not a shortage of demand for the phone. I still want the phone, even if it's 60 days later. And so the reason I bring that up is as we switch back to a chart of Apple, the reason I bring that up is because some people are possibly selling as if Apple is not going to recognize that revenue at some point. And so in my humble opinion, this pullback is nothing more than a buying opportunity. So you see the stock ran all the way up and you missed it. And what we tend to do as human beings is we say, I wish Apple would come back down to a reasonable level and I would buy it. But then what happens is Apple comes back down to a reasonable level and we can't stop thinking about two things. Number one, what's wrong with it? And number two, when is it going to stop falling? Versus thinking about it and saying, rationally, are people going to stop using iPhones because of the coronavirus? No, it's just going to delay when they can possibly buy it. And also, you got to think, Apple, unlike a food store, so let's just say you have a McDonald's over there in China and McDonald's is shut down. Well, when McDonald's opens back up, let's just say McDonald's, matter of fact, I'm going to go back big screen because I want to talk to you direct to camera here. I want you to think about this. Emmanuel just joined us live. Welcome to the party. All right. I want you to think about this in common sense terms. Okay. If McDonald's has a McDonald's over in China and they have to close down and they can't sell burgers, or Starbucks can't sell coffee, okay? Obviously, they're losing revenue every single day that the store is closed. However, when Starbucks opens back up in 30 days or McDonald's opens back up in 30 days, you're not going to buy 30 days of hamburgers that you miss. You're not going to buy 30 days of coffee that you miss. Does that make sense? You're not going to say, I didn't drink my coffee for the last 30 days. Give me 30 cups of coffee now that you're back open. You're not going to do that. So you got to use your common sense when it comes to food, coffee, anybody who has a product or service that's more so dependent on making sales every day. they're definitely going to be affected by it. Okay. But when you think about a company that has a product that does not necessarily need to be consumed, maybe that's the right word to use, that doesn't necessarily need to be consumed on a daily basis, you're still going to purchase the same product at the same price 30 days later. You're just going to be able to get to enjoy it 30 days later. They're not going to put Max on sale because you couldn't buy it for 30 days. And it's not a product that you would buy every single day anyway. So what I'm trying to say is when you use common sense and you look at this chart, you start to say, okay, at some point, Apple's going to recognize that revenue. At some point, we're going to get this under control, and you're going to buy a new iPhone, a new Mac computer, a new Apple Watch, or whatever the case may be. And so, in my opinion, it wouldn't be smart to short Apple. And it also wouldn't be smart that if you have been waiting and looking for an opportunity to get in this, don't try to pick the bottom. Don't try to say, well, I think it's going to come all the way back down to 230. Could it? Maybe, but I highly doubt it. And even if it did come back down to 230, you wouldn't be able to call and predict the exact day and the exact moment and the exact second that that's going to happen. So you do better looking at this and saying that makes sense. At some point when they open back up or get their shipments, you're going to buy an Apple computer. You're not going to all of a sudden switch to PC and say, you know what? They can't get Apple computers in here for 30 days. I think I'm going to go with Windows. No, you're going to be like, I'm waiting for the Mac. And so it makes more sense to start to scale in. All right. Keyword here, scale. Take small positions if it's a company that you've did that type of basic analysis on, and then you can see yourself building a position long term. Because when you look, zoom out. Okay. You thought this was the end of Apple here. And guess what? Turned out to be what? Great buying opportunity. Then you thought this was the end of Apple here. Turned out to be what? I'll say it. Great buying opportunity. You thought this was the end of Apple here. Turned out to be what? Great buying opportunity. Now I ask you, is Apple selling off because okay, this is a pro tip. All right. I want you to pay attention to this right here because I want to teach you how to think. All right. Most people don't think for themselves. They just panic. They watch the talking heads on TV and they're always late to the party to sell. And you're also, most people are always late to the party when it's time to buy back in as well. Okay. So let me just ask you this simple question because I want to teach you how to think. The Apple sell-off, just using Apple as an example, is Apple selling off because Apple made a bad product? Is Apple selling off because Apple has bad management? Is Apple selling off because people don't want a 5G phone anymore and something's changed in the technology? Okay, the answer is no. Apple is not selling off because anything that Apple has done. And so what you're going to be left with is a good company that sold off for external or life reasons, right? Things happen. We can't control them. But you're going to be left with a great company that pulled back for a reason that's out of its control. But once that reason gets resolved, once that virus gets under control, once the shipment of products start to flow again, guess what you're still left with? You're still left with a great company that everybody over here oversold due to some short-term situation. They sold a long-term good company. And so you have to reverse your thinking and say, this is perhaps your opportunity to enter into some of the stocks that you like, especially the ones that you like for the long term. All right. Paula says, are we on now? I do not know what you mean by are we on now, but yes, we're live. This is live right here, right now. So yeah, if you got questions, comments, type them in the box. If you're watching on YouTube or Facebook, I can read your comments. I can see them. So, feel free to participate. All right. Same thing with Facebook. I believe I can see your comments on Facebook. So, yeah, I don't see any. I'm gonna type the word "we're live" on Facebook, and if someone can comment underneath me, that'll confirm that you guys can see me. But anyway, so those are my thoughts, right? So you got this big sell-off. We don't know when the sell-off is going to end per se. We can go back to the charts. I told you my thoughts on where I think the overall market would find support. Let's look at the Dow Jones Industrial Average. Dow Jones Industrial Average is about at its support level right here. So I'm not surprised we got to pull it back. Look, pull it back right there to about support, right there to about support, right there. We are almost there now. We're not quite there. And so being that we're not quite there, how you should be thinking about this is I wouldn't be surprised tomorrow, because most people get caught off guard and be surprised. Don't get caught off guard if the market sells off a little bit more down here to about the 26,500 level. In fact, I would anticipate it. So if you're a day trader or something like that, maybe a good time to jump into a short-term day trade. But I think more importantly than a short-term day trade, you start to look down at this level and say, this is where I would start to build a position on some of the Dow component stocks or some of the S&P 500, which has actually a little bit more ways to go. Let's look at the comp Q, which is the tech sector. All right. Clearly not down here near its support, but it could potentially fall down here to the A250. However, I'm looking at this possibly touching the top line here and then turning around or building at least a base up here, especially if there's no new cases about the virus, no new, discoveries of it being spread around. I think we're going to be all right. All right. Vernie Chu. I hope I'm saying that name right on Facebook. Thanks for commenting and letting me know that everything is working out live. So those are my thoughts on the S&P 500, the NASDAQ, and then the overall market. So let's talk about the mindset of the people who are also panicking. Is typically because you don't have the right strategies. So if you guys know anything about me, or if you're new and you just saw this random guy on live, one of the things you know that I preach, number one, is learning how to read stock charts. You got to understand when it's time to take profit, when's the best time to sell, which we talked about this inside of our group, inside of Power Trades University. And you also got to know when is the best time to buy and start to put money back to work. But that's part of it, right? Learning how to read the charts, determine the best time to buy and sell. The other part of this game, of this industry, is having strategies for when the market pulls back like this. I always pound the table in my videos or in my trainings and say, the market moves three ways. The market moves up, it moves down, it moves sideways. Market moves three ways. Most people, sadly, they only know how to make money one of those ways, and that's when the market goes up. And we are learning, right? If you haven't learned by now, you will learn that the market doesn't only go up. And so when I'm talking about learning how to sell call options, if you own stock, how to sell options against your stock, we're talking about being able to rent out your stock, bring in some premium, bring in some money so that you can have a little bit of a cushion if the market pulls back. And if it doesn't pull back, I like to call it my rental income strategy, where I own stock and then I rent it out. That's one strategy. Okay. Second strategy is whether you own stock or whether you own call options because you're bullish, is being able to buy put options to protect your portfolio or protect your account from loss. And so when pullbacks like this happen, had you had a put option in place or said, okay, I'm going to at least buy a little bit of protection because the market's running too far, too fast, or getting a little bit extended, you kind of lock yourself in, right? And so, just to give you an example, let me share my screen here just to give you an example, right? Let's just say you owned some stock. Let me turn on my drawing tool. Shelton Flanagan just joined from Jersey on Facebook. Welcome to the party, Shelton. YouTube, feel free to share with me if you're joining us and where you're from as well. But let me just give you an example. Let's just say you own some stock XYZ, right? You own stock XY. I'm just going to call it XYZ, all right? And we're going to draw a little board game out here, okay? Let's just call this, right, $10, $20, 30, 40, right, 50. Okay, let's just call this time down here. Let's stretch this out a little bit further. All right, now I'm freehand drawing this, so it's not going to look perfect, but let's just call this, you know, January, February, March, April, May, right, December, okay? What most people do is they buy stock XYZ about right here, all right? You buy it, and then you watch it go up, right? Oh, okay, I'm doing great. It's up at 40. And what they don't realize, you bought it at 20, it's up at 40, right? Most people aren't doing just this simple strategy. I'm saying I bought it at 20, it's up at 40. I'm going to buy a $30 protective put. Might cost you like $2. I don't know. It just depends. $2 times, depending on how many contracts you got, etc. That's not the point. The point is, when we get hit with coronavirus and foolishness and stuff like what's happening right now, when this stock starts to turn around, okay, and sell off like it did and come back down here to 20 or come back down here to $10, this is where the stock is at. Just this little strategy right here, you can force somebody to buy it from you at 30. So what happens is you'll never lose more than this distance right here, because at 30, your protective put kicks in. So you bought it at 20, ran up to 40, you got a protective put. So when this thing starts to sell off, okay, you can force someone to buy from you at 30. So if you bought it at 20, you can force someone to buy from you at 30. You're still profitable by about $10 minus the cost of the protective put. But that's a lot better than watching your money come all the way back down here to $10. And then you're saying, oh, I was up, but now I'm down. Or, you know, you're asking, you know, what do I do? How do I repair this trade? And at this point, it's too late. If you didn't put the protection in place either before or during the sell-off, you're late. Or I'm not going to cover selling covered calls, but had you sold the covered call, right, as it pulled back, you were able to keep the top end of that covered call or selling those call options. You can buy it back to close it out and keep that premium. And so it's so important to have these strategies. And even in my own trading, I'm starting to love spreads, bull call spreads, covered calls more, even though they cap your potential profit. When you start moving a big account, a big trading account, 100, 200, 300 plus thousand, $1 million account, you're less worried about making unlimited money and you're more worried about just making some money, but protecting your overall portfolio, right? It's not as exciting to make 100 or 200,000 at the risk of losing 800,000 to $1 million trading account. And so the protective put, the covered call, all of these strategies become even more important as your account grows, because again, you want to preserve your capital and not put it all at risk just trying to make a tiny bit amount. Now, if you have a small account, you're thinking, well, so I shouldn't learn these strategies until I have a big trading account. No, you need to learn them now, because it's a good chance you won't get to a big trading account if you don't have these strategies, number one. But number two, when you get there, you don't want to now be confused on what to do to protect this wealth and to preserve this wealth. And I think that's where a lot of people make mistakes. You look at, if you talk to people who aren't in the game anymore, you say, what happened? You're like, I made a lot of money and then I lost it all right back, right? I was up 1,000 and then I lost 1,000. I hear those stories all the time, especially from people who are, habitual gamblers, right? I got in on that Tesla stock and then they got right back in on it and lost all the money back. It's like, it wasn't skill. It was just luck of the draw. They didn't know about bull call spreads. They didn't know about protective puts. They didn't know about locking in the gains on their portfolio. And, that's the gambler's approach. And that's when people say, well, isn't this like gambling? It's like gambling if that is the only strategy is to buy, hope, and pray. Does that make sense? Then yes, it is like gambling. So any questions? I just wanted to jump on, talk about coronavirus. Any questions you got before we get ready to wrap up? We'll take some Q&A if there's any questions. But the big picture is that this virus won't last forever. I don't want to say it won't last long, because long, I don't know what the definition of long is. Could it last another month, 2 months, 3 months? I don't know, but it won't last forever. That I do know. It won't last forever. The second thing I know is that it's not like people stop using iPhones. It's not like people stop using iTunes and cancel their iTunes subscriptions. If you look at gas and electric companies, it's not like people stop using gas and electric. So there's utilities or companies that are not affected by the coronavirus. So there are some still stocks that you can trade bullishly, but then there's also a set of stocks that this is a great opportunity to potentially buy them, because once this is resolved, there are certain products that you're not just going to go buy a substitute of. You're not going to go buy a substitute Tesla. You don't make that type of purchase and then say, oh, you're out of stock, I'll just go with a different electric car. No. You're going to wait until this issue is resolved so you can buy a Tesla. You don't say, I was initially going to get a Mac computer, but you know what? I guess a PC is fine. No, if you needed a Mac today, you're going to need a Mac tomorrow. You're not going to change what computer you're going to buy in 30 or 60 or 90 days. You're going to wait till it's available again, and then they're going to recoup that revenue. So I want you thinking about that as you look at stocks and as you look at different things that you may be considering buying, versus just paying attention to what they're telling you on TV and not actually thinking through this and thinking about your investments and thinking about the best way to scale into some products and services that you love and that are going to do well after this is over. And they're doing well now. They're just pulling back because the entire market is pulling back because there's fear of supply chain, global supply chain hangups. All right. So I don't see any questions, but after this video ends, I'll be around looking at the comments if there's any comments or questions that I can answer. But be sure to subscribe, hit the like button, share this with somebody that needs to hear it. But the coronavirus is temporary. There's still some stocks that'll be good companies long after this is over. And you're going to look back and you're going to say, that was my opportunity to scale into some great companies. So I'll see you guys on the next video.